Good morning. Welcome to Stock Market Today. It's Friday, October 25th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email that'll give you daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities were mixed and fairly quiet Thursday trading. Tech, utilities, and materials outperformed while comm services lagged due to weakness in Twitter. Treasuries were little changed on the day. The dollar was weaker versus the yen, but better on the euro cross. Gold finished up 60 basis points, and WTI crude settled up 50 basis points. As we get to the desk this morning, futures are mixed, but U.S. equities are on track for a third straight week of gains following a 3-week losing streak. Asian equities were mostly higher overnight, with China a standout, one of the better performers, but European markets are somewhat weaker here this morning. Treasuries are mostly stronger across the curve. Dollar not doing much against the yen or the euro. Gold up 80 basis points. WTI crude give it a little bit back, down 20 bips, but on track to post a big weekly gain. Let's look at the S&P 500 here because we are grinding at the 3,000 level as earnings are in focus, and it was a busy night of earnings last night, hearing from the likes of Amazon, Intel, Visa, as well as many others, trying to grind through that 3,000 level, which still remains resistance. Not ready to move the resistance level from 3,000 just yet, although I would love the opportunity. On the downside, key support is at the 200-day moving average near 28.75, and then the August lows are the key level. 28.20 on the S&P 500 are the August lows. The RSI is holding in bullish ranges, and that's encouraging. And Chaikin money flow remains on a bearish rating, but it's improving slightly of late. So indicators are mixed as the S&P 500 chops around the 3,000 level, slightly closing above that level yesterday, and we are looking for that opportunity to remove that resistance mark. Now, our market in a minute. What are we writing about in the note today to Chaikin Analytics clients? Well, it was a mixed session yesterday as earnings are squarely in focus. Semiconductors hold the relative breakout, and I think that's important in light of what happened with Texas Instruments. We'll take a look at that a little bit later in the show. The growth to value shift continues, and now there's some momentum behind it, and that is lending support to the industrial sector, but we're going to look at the industrial sector in a slightly different way. A little bit later on in the show, futures do point to a slightly higher open here today. Looking at the power bars now for the major indices, the Dow gave back 10 basis points yesterday, 2 bulls to 7 bears there. S&P 500 up 20 basis points, 109 bulls to 82 bears. So ever so slight deterioration in that ratio yesterday. NASDAQ saw an improvement, though, and was a big outperformer, up nearly 1%, 24 to 15 bulls to bears. Small caps underperformed, down 14 bips, but still a solid power bar ratio at 616 to 365. Slight downtick in bonds. Tech was the big performing sector yesterday, up nearly 1.5%. Does have a power bar ratio that skews in favor of the bulls at 12 to 11, and obviously that was a big part of the outperformance on the NASDAQ for the day. According to the Chaikin Power Bar, small cap stocks, large cap stocks are somewhat bullish. Major markets are mixed. Let's hit our stock of the day now. Auto-generated by our algorithm based on the Chaikin Power Gauge rating. Its reinsurance group closed at 156.84, up 12 basis points yesterday. Power Gauge rating very bullish due to attractive financial metrics and positive expert activity. Earnings and technicals are middle of the road. 20 factors, 5 in each of these 4 categories, give us our very bullish rating, and it's a strong trend above the rising long-term trend line. Strong industry group based on the power bars, but as I started to highlight this week, we're starting to see potentially a shift within the financials group, right? We looked at the banks yesterday. The banks were beginning to show signs of outperformance, and that could be coming at the expense of insurance, which has been a solid outperforming industry group. Now, for RGA, reinsurance group, it really is a mixed bag. Here's our very bullish rating met with an inline performer on the relative strength. We'd love to see that stronger. At the same time, the stock is overbought with bearish money flow, so really kind of confirming this sloppy, choppy trading range that we've been in since July, kind of similar to the market itself. No real reason to be excited about RGA here today. What we are looking for, however, is an improvement in relative strength. and the overbought, oversold indicator rounding down to an oversold position to set up a better entry opportunity should the group continue to be strong and start to show signs of outperformance on its own. So I think that there are shifts taking place in the market, and we're early days within those shifts. We need to give them some time to play out. But one of those shifts that I'm watching closely, because we have been bullish on insurance, is the fact that insurance on a relative basis does appear to be rolling over in the near term. So that's something we'll be watching very, very closely. Let's hit our sector tracker now. Movement of the major sectors over the last 5 days. A few strong days for energy here right now. We've been bearish energy. Our model tells us we should still be bearish energy, but that doesn't eliminate the fact that energy's put in a strong week, right? And it just said oil is on track for big gains this week. Energy up nearly 3% over the past 5 days. After that, the utilities group continues to hang in, even as yields chop around. Same with financials. Financials are acting well. We highlighted the banks yesterday. We could highlight the financials if we wanted to, start to take a look there. Financials are starting to show signs of outperformance, and I do think that that is interesting. I also think that that could be a function of this growth to value shift that's playing out. Financials are a big component of most of the value indexes, and so to the extent that value is outperforming, could be a tailwind to the financials. After that, staples, REITs, and industrials are middle of the road. We're going to take a look at industrials. Nice to see tech perk up, right? We've been talking about bulls want to see technology doing well because it is such a large weight in the index. Towards the bottom of the list now, healthcare, discretionary, and comms. Comms had a tough day yesterday. Twitter down around 20% following their earnings announcement. Discretionary is a broad group where you really have to drill down to the industry level, right? Home builders have been a bright spot. Retailers have been weak, but we're going to take a look at retail services here in just a second. It is our industry in focus today, and it's been an underperformer over the past 6 months, lagging the S&P 500 by 5.75%. However, the power bar ratio is neutral. 20 bullish stocks for 20 bearish stocks, and that gets it a rank of number 11 of 21 subsectors, so middle of the road. So what's interesting to me is, there's some opportunities in retail services, but then there are also the names you want to avoid. So it really does make sense to drill down. You can drill down on the holdings. The names you want to avoid: Ollie's Bargain Outlet, OLLI, very bearish rating; National Vision, EYE, very bearish rating; and Grubhub, a very bearish rating. And if we take a look at the ETF, you got to see the neutral rating. Our Power Gauge ETF rating for XRT is neutral. The trend is strong as the fund is above and now rising long-term trend line. And look what's happening here, right? Going from a real underperformer throughout the majority of 2019 to now beginning to outperform. Notice the shift, right? Severe underperformer. Intensity of underperformance begins to wane. And now a slight, and I say slight, outperformer, right? So we have this downtrend, shifts into a neutral trend, and now on the verge of trying to work higher. Now, the fund is overbought in the near term, but Chaikin money flow is shifting bullish as well. Now, we've seen headwinds like this. We've seen head fakes, rather, like this in the past. So I think I want to give this one some time to play out. But I think a breakout through this 44 level would really be encouraging for XRT. And if we see this relative strength improving as well, it might start to make sense to go looking for some of the bullish names within this group. So again, trying to find the changes of trend that are likely to persist and find them as early as possible. XRT has been a group that we've disliked with good reason. And now we're starting to look for opportunities there. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. Align adds over 14% following their earnings and guidance. Lam, right? Everybody was starting to get worried about semiconductors because of what happened with Texan. Well, Lam comes out and puts up some good numbers and guidance, takes that stock higher by nearly 14%. O'Reilly, ORLY. The automotive stocks have acted really well. ORLY up 9% on the day yesterday following their earnings announcement. AMAT goes up 9%. Caught an upgrade from a sell-side shop in addition to being a derivative of the earnings announcement from Lam Research, LRCX. Finally, ALLE up nearly 9% on earnings. On the loser side of the board, right? Comm services was under pressure, and there's your reason why at the top of that list. Twitter down 20% following their earnings announcement. ADS 13.5% to the bad following an earnings miss. Drillquip down 11% on their earnings. Baxter made an announcement that the company's audit committee has commenced an investigation into some intracompany transactions. That was enough to take that stock lower by 10% on the day, and eBay was down 9% following their earnings announcement. So let's dive into the charts now. On Fridays, I look at key themes and relationships, and at the risk of sounding redundant, we're going to look at my favorite. Right, I've called it out many times. You've seen it on the show, but this really is. If somebody asked me what's the one chart that you could look at, if you could only look at one chart as an indicator for the market, what would it be? This would be the one. Semiconductors relative to the S&P 500. We've talked about it a lot. When semis are outperforming the market, i.e. this line is moving higher, that tends to be bullish for the market in general. Now, what we had last week was a breakout through 2-year resistance. And then a bit of a pullback exasperated earlier this week by the earnings miss from Texas Instruments. I started to get a lot of questions. Hey, Dan, you see this Texan print. Does that change your view on semis? And my response to that is, well, a change of trend would change my view. Trend hasn't changed just yet. Admittedly, I was watching it closely, as I always do. But trend hasn't changed. Now we get the report from Lam and AMAT moving higher with it. Solid print from Intel last night. Right, so this trend remains intact above a rising 200-day moving average. At the same time, momentum holding bullish ranges. Even on that pullback following the Texan print, RSI of the ratio didn't get much below 50, and it has quickly rebounded, right? So we're watching semis closely. I'm asking the question, what if Texan was an outlier, right? Everybody started to make the read-through that the Texan report was going to be bad for the semis in general, but what if they were the outlier, right? Still early days, still a lot of earnings reports to come, but Lam and AMAT performing well would certainly throw some water on the semis rolling over fire, and we'll just continue to watch it now. And on an absolute basis, still in a solid uptrend, right? So no real reason, in my opinion, to change my view on semis as a group just yet and what that could mean for the broader market. To the extent that semis continue to outperform the market, odds increase that the market itself, S&P 500, will break through that resistance level that we've been highlighting for the past couple of weeks now. The other key shift in the marketplace that I'm watching closely is the growth to value shift. What we're looking at here is the Russell 3000 Growth Index relative to the Russell 3000 Value Index, and you can see a steady uptrend off those November, December lows until recently. We've broken the uptrend line, and consolidated and rally attempts are being rebuffed, and the ratio is now beginning to roll back over again. What's interesting to me is that the RSI of this ratio was solidly bullish throughout this uptrend, right? So giving a momentum confirmation to what we were seeing in the price trend. But now look what's happened. The initial move down actually produced an oversold reading for the first time in a long time for the ratio, and rally attempts could not get much above 60, right? So potentially a momentum shift for the ratio as the RSI appears to be shifting to bearish ranges, right? And one of the key reasons in our view that growth was outperforming value is because global growth was slowing. And in a slowing global growth environment, our argument is investors will pay a premium for growth, and growth should outperform value. And a good way to see that global growth was slowing is the bottom of the chart here, the ratio of copper to gold, right? Copper is an industrial metal. Gold is the metal that everybody runs to when they're cautious. And this clear downtrend for the copper to gold ratio coinciding with the clear uptrend for the growth versus value relationship. And now the copper to gold ratio has broken the downtrend and is actually starting to move higher, right? So to the extent that this is moving higher, we would expect growth to continue to underperform value. And that's playing through into the industrials, which is a value group. And if we look at them on an equally weighted basis to neutralize for Boeing, we can see a breakout on an absolute basis above the 200-day moving average, confirmed by momentum. And RGI is breaking a downtrend relative to the S&P 500. So with value outperforming, we might want to start looking at the industrials. That's going to wrap it up for today. I hope you all have a great weekend. I will be back on Monday.